Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Blind Run on the internet and Matthew in real life. And help us, someone, because dang, that Bitcoin mining is getting skinny. Am I right? The market's been insane here recently, obviously, with those dips all the way down into the 70K range, albeit top 70K around that 79,000. Then it recovered and went right back up into the 90s. And then today it just liquidated again. And it makes no sense because we got bullish news from, of course, President Trump on the cryptocurrency reserve. And I'm not really sure what to do or think about it because I don't know when to sell my Bitcoin so that I can cover my hosting fees. It's getting crazy, but today, the cryptocurrency market experienced significant volatility, resulting in the liquidation of approximately 650 million worth of crypto assets within a 24-hour period. Bitcoin's price dropped below 87,000, reversing from a high above 109,000 last month. Influenced by economic uncertainties and a possibility of a recent policy announcement regarding a U.S. crypto strategic reserve, the market saw both long and short positions being liquidated, with particular focus on how Bitcoin might react to these economic and policy-driven fluctuations. Now, when the market is extremely volatile like it is right now, it is important to note, let me get this, it is important to note, of course, that this is why we mine and we don't buy cryptocurrency, because if you were to purchase it or try to play a long or short, the likelihood of getting completely liquidated is much higher than if you just have equipment running. However, if you are, in the position where you need to liquidate to pay your power bill, that's going to be a bit of a problem. We talked about this before, and I think it's really important to reiterate that you shouldn't be waiting to liquidate your cryptocurrency until the day that you need to pay the bills. You should be at least pulling into some sort of stable coins on the days that you're profitable. Remember, your job as a miner is to stay in business, not to mine and hold. So if you keep track of it daily, like I do at least, it's a really good idea to say, hey, I got my profit report today, and with the price of Bitcoin as it is right now, I'm going to go ahead and liquidate, secure those profits, make sure I can cover my power bill, and then move on from there, because otherwise you could end up in a position like where maybe you saw yesterday or over the weekend, oh, wow, everything's going up. Everything looks really, really good. And then you push forward and it gets to today and you thought it was going to keep going up, but it didn't. And now you're short X amount of dollars to pay your power bill. So be extremely cautious there. I want to say thanks for the $9.99 from Retro Mike. Said thanks for the Osprey trip and interview. Of course, I enjoyed going out there. So if you guys haven't watched that video, I guess a little bit of shameless self-promotion. We did go out and interview Osprey and get an idea of what they are doing as far as mining goes. And then, of course, their other operations, some really cool stuff over there, but make sure you go check it out. Another thing that I wanted to bring up that is related directly to this is when we take a look at the volatility coming into Bitcoin, this is actually a good news, essentially, because we talked about this last week, that Bitcoin was basically at its lowest volatility level ever in history. And anytime it's been an extremely long time of low volatility, it does end up being followed by an extremely volatile time, which is exactly what we're seeing. So these patterns that we see within the Bitcoin cycle do seem to still be proving out to be true, which is a good indicator that we do still have another 8 months on this bull run with some even higher highs. And what I would consider this to be is just that correction that we've seen over and over and over again, right? Like if we go to the all, you get these corrections right before a big takeoff. Like here was a big correction and then it went from that $38,000 price range to that $58,000, $60,000 price range. If we are going to predict off of that, of course, with this dip, maybe we could say that even based on this, we have another 30% to go. And then that would mean we have that potential of really breaking above that $150,000 price point, which I think is the conservative estimate. Of course, if we are going to say it repeats exactly the same, we would expect 210,000. But I think, it's better to play on the side of being conservative, especially considering the business in which we're in, which is cryptocurrency mining, right? And you don't want to be in a position where you're FOMOing into a bunch of equipment as we roll into the bull run and then not get it all deployed and then end up that decrease in price happens before you can get to it. I'd play on a timeline here. I've talked about the timelines before. I would play on that 8-month timeline more right now, I think, than I would play on essentially the actual price, right? So the timeline would be start looking to liquidate in 8 to 10 months. Somewhere around there, not the game of essentially post. I just lost my track of thought. But yeah, you would want to basically play it on, as opposed to saying when it hits 210,000 or 180,000 or whatever your price target is. I think following still that 4-year halving cycle on a time basis is a safer way to play it, right? Because if you're going to play on the price basis, you can miss it. And that can be detrimental to your business and everything like that. But even then, of course, the profitability on Bitcoin has come down significantly. If we go to hashrate.no and take a look at some of the ASICs for, where is it? Bitcoin. This is at 10 cents a kilowatt hour. Of course, if you were, able to be a large mining farm and you are able to invest in like S21s and like the hydros, etc., you're still in a good position. But most people, they're going to be down here in the M60 or below. If we take a look at, let's say, like an S19 Pro, I think that's a pretty common one to have. Maybe a lot of people, I've bought a lot of S19s, which are below this, for example. But at 10 cents a kilowatt hour, it's definitely in the non-profitable range. Of course, there are ways to improve this, like low power mode, custom firmware, and of course, reducing your power cost. But it does bring into question of like, at this point last cycle, correct me if I'm wrong, but Bitcoin ASICs were back into profitability, just the prior gen ASICs. We were back into that profitability range almost all the way down to the S9s, right? Now, the S9s didn't really become more profitable again until that bull run fully started or the peak started happening. But it was still, for the most part, we were seeing profitability across the board. The profitability is a lot more difficult now in Bitcoin mining. And that does mean I think this might be the last cycle that we really get to see where that strategy of purchasing equipment in the bear market, like last hand equipment in the bear market, and then running it through the bull run is going to fade away, right? So with the S19s, for example, and then next cycle, it would be an S21. Previously, I would say, okay, bear market, we're going to go ahead and we're going to stack a bunch of S19s, for example, this cycle. We're going to hold them. We're going to mine on them when they become profitable, and then we're going to get rid of them, right? And then we're going to swap them out, and then we'll do rinse and repeat. That may not be the best way to go anymore, and actually purchasing the most efficient equipment at the given time will be a little bit better, because I'm already seeing that this cycle. And I wouldn't say that I'm like for sure in in like a terrible state for purchasing S19s or anything like that. Like, I have plenty of them to come online when they do become profitable. I do still think they will become profitable at some point here. I think the amount of time that they'll be profitable is a lot shorter. And then following that up, I think like a lot of people make a lot of good points with solar. Solar technology is getting better and better and cheaper and cheaper. And we can only hope that within the next the next 2 years or so, that solar can be viable enough to build like a home mining shed or power some of your mining rigs off of that. Because I don't think with the cost of energy and everything going on right now, especially with all of the conflicts, that we're going to see that energy price drop that Trump was promising. And we really are still talking about, what is it? In my area, a 3x in power cost over the past like 4 years. It's just astronomical. And while it has come back down, it really hasn't come back down to that point where you can go shop it out. Now, if you're a larger firm, of course, we would talk about utilizing stranded gas, all of that sort of thing. But this is really a channel focused on that home miner, and the home mining is getting more and more difficult. And it is, frankly, pretty stressful, I think, for a lot of people. It's not the old days of, hey, we're running into the cycle. You can start mining now and holding a little bit of it and then getting rid of it. And because we have this introduced volatility right now in the market, you can literally from day to day go from profitable to losing a lot of money. I hope you enjoyed this clip from the Crypto Mining Show. If you would like to see more from this particular episode, take a look up here. Don't forget to also subscribe to the channel. And if you want to support me directly, you can go to sonofatech.locals.com and become a member. Thanks for watching, and I will see you next Tuesday.